What's up guys, Tyler here. Today we're going to talk about the hidden cost of buying a home. One, earnest money. You're going to be asked for money before you even sign the paperwork. When making an offer on a home, the sellers will usually ask that the buyer provide earnest money. So what is earnest money and how much is it? Earnest money is a sign that you're serious about the offer you just made. It's a little bit like a security deposit. You're giving the seller some money to demonstrate that you aren't going to make an offer and just get the seller all excited and just go buy somebody else's house. The money basically proves that you aren't a flake. The amount can vary, but it's often around $500 to $2,500, sometimes up to $50,000, depending on the type of transaction. Generally, you'll get the money back or go towards the purchase on the home. On the other hand, if the financing falls through due to a problem on your end, you may not see the money again, depending on how your contract is worded. Number two, closing costs. This is a general term used to describe all of the fees paid at the closing of a real estate transaction. Unfortunately, there are a lot of them, including mortgage origination fees, title insurance, recording fees, surveys, notary fees, the list just goes on and on. Overall, the closing costs are usually 1 to 2% of the value of your house, potentially up to 5%. Many buyers don't factor in closing costs. These will vary market to market and lender to lender, but they can impact a buyer's maximum budget by limiting cash on hand for other deposits and payments. Generally, you pay the closing costs at the closing table, along with your down payment. Also worth noting, buyers can roll the closing costs into the loan. To do this, stay tuned to my channel and watch future videos. Number three, property taxes. It's easy to forget about property taxes. Your realtor or broker will point out that it will be lumped into your monthly mortgage payment. This money is placed in escrow, meaning you'll make your monthly payments and your lender will put some money aside every month and pay taxes for you. Not every homeowner does it like this, but many do. Number four, homeowners insurance. Clients often underestimate the cost of their homeowner's insurance. On the plus side, your homeowner's insurance will likely be rolled up in your monthly mortgage and paid by your lender to your insurer, just like property taxes. So once you figure out what your monthly mortgage payments on the loan will come to, and you've added the property taxes and your homeowner's insurance, you'll have a solid idea on what your total mortgage payment will be. Number five, funding the escrow account. Most home buyers are unaware that they will be asked to pre-fund their escrow account to a level that will cover their first year taxes and insurance. You guys may also be surprised to learn that most lenders require extra money to remain in the account. This is to help offset higher than estimated insurance and tax expenses in the following year. Number six, private mortgage insurance. If you don't have enough for a down payment, but your lender will take less than 20% down, you'll soon be acquainted with private mortgage insurance, also known as PMI. That's an insurance payment that lenders require when you don't have 20% equity in your home. It's their insurance that if you don't make your payments and say skip town and you just leave your home, at least you'll have paid the PMI for a number of months or years. Number seven, your interest rate. Most buyers don't understand the difference a higher credit score can make on their overall loan costs. By taking some time to understand your credit before committing to a loan, you can actually improve your credit to a level that will provide you with a lower interest rate. A slightly lower interest rate can save a substantial amount of interest over the lifetime of the loan. Number eight, moving costs. It's a one-time cost that you've likely considered. Still, if you haven't, factor that in. If you're hiring movers, a same-city mover will cost around $1,000. However, a cross-country move, it'll top $6,000 or maybe even more. Number nine, home maintenance and repairs. Home maintenance costs can really catch people off guard. Depending on your house's age, homeowners should expect to spend around 1 to 4% of your home's value each year on maintenance and repairs, according to the National Board of Realtors. Some years you may only spend a couple $100s, but if you budget for more, you'll have that money set aside when you need a new roof down the road, or an air conditioner, or furnace, or whatever. Number 10, utilities. Some of the utility costs you'll want to consider are the electric, gas, water, sewer, cable, phone, and internet. You'll not only be making monthly payments on these, but it can be expensive just setting up the utilities. Some companies will charge a deposit. Other providers may charge a service fee or connection fee. If you're nervous about what unseen costs are lurking out there, grab a snack and maybe a calculator. You'll be far better off watching my channel and educating yourself than to face your financial fears head on. Like always, thanks for watching the video. Please like, share, comment, and subscribe. See you guys in the next one.